thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what impacts mortgage rates on a daily basis, whether it might come from the economic calendar or something like headline news or geopolitical or even a combination. But it can really get a little confusing out there when the market sentiment changes and you're seeing good news is now bad news and vice versa. Well, we try to get into all that with our discussions and what drives rates and let you know, give you that information as to what's going on and why it's happening, and hopefully give you a little bit more insight as to how you can take action if you're looking to kind of follow uh, rates out there. A little bit about myself is I am a loan officer. I do work with a national lenders, so we're here to answer any questions if you guys have anything. If we could be of any assistance, we'd love to earn your business for any refinances or purchases. But again, we'd also like to be a resource. So if you guys got questions, we'd like to be able to answer those for you, get that information for you guys. So without further ado, we'll just start off with the economic calendar. We do got a minor report today. We get it on a weekly basis by the MBA, which is the Mortgage Loan Activity Report. It kind of gives us an idea if loan activity is picking up. So if it's a refinance or purchases, we can kind of see where things are going. So with the purchase side, we do see a dip again. So things have come down on purchases. And then we also see from week over week, and then refinance, of course, is dipping now with the rates spiking a bit. Now, again, this is a minor report here. We got the wholesale inventories. Uh, it went so for the month of April, March went up 2.1%. Forecast is supposed to keep that same pace. It was a little bit hotter in the month of April at 2.2%. Earlier, we had the 10-year note auction. So touching off of that, it didn't bode well. It didn't go very well for yields, and as a result, we did go further down the rabbit hole, so to speak, uh, if I'm allowed to use that term here. So about 10 o'clock here, it's right about here. This is what happened. So as you see, this was going down, and just before that, it just continued going down. Now, we did subside a little bit, but again, it did not. That's kind of what the influence was. So what's going on here? Stocks are down a bit today, but one of the things we're seeing is investors kind of pulling out a little bit. We are getting some competition out there in terms of corporate bonds for the mortgage-backed security side of things, but we're getting a lot of light trading so far right now. A lot of it is due to the CPI report coming out on Friday, and again, there's been talk that they're hoping that we see that the inflation has peaked, so they want to kind of see that, but we won't know unless we keep watching the data. And so this data might help us realize if we peaked or if it looks like it could be continuing. So we'll wait and see on Friday as to what that will entail. But meanwhile, we're seeing the oil prices continue to rise, and right now it just went up over 120, I think around 121 and change per barrel right now. So again, not too promising for those who go to the gas pumps here, and especially here in California where things are really high, almost $7, $8 a gallon right now, and but where the rest of the country is down closer to $5 a gallon. So, anyways, well, us California people here in California will be envious of the rest of the country in that terms. But in any case, here's the mortgage-backed securities. We did break above the 25-day moving average yesterday. Today we are getting pushed below it. We're down about 27 basis points. What does that primarily mean? Well, figure this: 100 basis points equals 1 point. 50 basis points equals a half a point, and 25 basis equals a quarter of a point. So this is kind of how you could determine the pricing within a rate, and typically within anything above 12 basis points is kind of could potentially, or 1/8 of a percent is kind of like the threshold of when we could potentially see a rate movement. So going from 1/8 of a percent in the pricing. Sometimes a quarter depends on what the investors are paying out, but so in that range, pricing could be worsened. So obviously, the pricing here in this case has worsened from yesterday's close, and yields have spiked again, back about 3%. We're at just under 3.03% for the day, and we'll just have to kind of wait. Friday again will be more of the day they're kind of waiting towards to review the CPI report. and see how inflation, if it's going to have another spike or if it looks like we peaked and hopefully start seeing it subside a bit. So lastly, let's go ahead and take a look at the average rates for the conforming loan limit in the U.S. They do have points built into it, and they are kind of a day delayed because they're based off the information from they did yesterday. So the 30-year fix is now at 5.48, and then the 15 years at 4.82%. Again, these are just averages. If we could be of any assistance in terms of rate quotes, please feel free to reach out. We are here to again help out. If you guys could, if we could ask if you guys help us out and smash that like button, we'd greatly appreciate it and share us. We'd love to be able to get the channel kind of a little bit more news out, or at least spread the channel out there a little bit more. We do greatly appreciate you guys, and we want to thank you very much for your time. And we'll hopefully see you guys tomorrow's video. Bye bye.